let's talk about Mercado Libre, which is not for handmade things, but it is in Latin America. Overnight, the market was really enjoying their results or thinking very highly of them. And at the moment, they're up about 1.5% today. That's in the context of a market that's generally not up 1 and a bit percent. So they are kind of getting a push from this earnings report, I think, even if it's not a kind of eye-catching stock was up loads percent. Sometimes that's buoyed by a rising market, which makes it look a bit more punchy. But their revenues came in at $3 billion for the year. They were up 56% compared to a year ago. Sorry, $3 billion for the quarter, not $3 billion for the year. $10.5 billion for the year. And their earnings per share were $3.25. That's compared to a loss from last time, so however much higher you want to call that. And they were $9.53 for the year. The stock is still quite a way above that, but just over half their revenue came from their commerce arm, which is their kind of Amazon-like platform. The other, just under half, came from their fintech platform, which is a bit like PayPal, but they're kind of integrated into these things. So what they have then is a online kind of commerce platform and something that kind of is, in theory, quite a high margin, low maintenance, money making machine. Remind you of anyone? Anyway, they like reporting things like gross merchandising volume. One of the things I notice when I look at their reports, as I've done a couple of times now, is they're very much more interested in talking about performance metrics than they are in talking about financial metrics, which I'm not saying that's a good thing, not saying it's a bad thing, but it tells you a lot about how they think about themselves as a company. And they want to say, here is what we're aiming at, here is what we're trying to deliver on. We're trying to deliver on stuff like gross merchandising volume, which is up 35%, and total payment volume going through their payment platform, which is up 80%. And the amount of payment volume that's going through things that are not their marketplace, so people using their payment platform elsewhere, and therefore them getting stuck into basically everything in Argentina, Brazil, and Latin America, so on, is up 121%. And they have a credit portfolio, which is up 68%. This looks very impressive, but it is quite hard to find on there. You have to dig it out. They've buried the EPS number somewhere, because clearly either they don't think it's very important or they don't want you to think it's very important, or both with these things. So it took me a little while to go digging out that number, and I found lots of other ones that were related to kind of performance metrics. All in all, I guess very impressive. They're growing well. They're busy entrenching themselves quite well. I have a couple of thoughts here, Steve, but what, if anything, stood out to you here? Mercado Libre is a stock we've talked about a few times on and off this podcast.
Yeah, it was really interesting to me to look at the sort of fintech side of their business finally catching up to the commerce side of their business. The commerce side is not growing at a particularly quick rate in comparison to how it has done. I think it was up 22% year on year, but if it was FX neutral, it was about 36%. But the fintech was up nearly 73% year on year. So that's still like rapidly coming along. So it's about 1.7 billion to 1.3 billion if we're taking it back into dollars here. So it was quite an impressive statement from Melly. There was not really a lot to dislike in pretty much the whole report. I think they throw out 1.8 billion in free cash flow as well, Steve. Did I see that at the end of the report?
That might be right, yeah.
Yeah, and that's again it's impressive to see these numbers from Mercado Libre, because it's another one of those stocks that we were told a couple of years ago would never make any money, and here it is making lots of money. So it's a very, very interesting business, Steve. I think it's got a quite a large future ahead of it now. I think it's started to sort of squash those rumours of Amazon coming in and eating its breakfast, and it's squashed when C came over to try and compete with it as well. It's one of its competitors has come out as being fraudulent. So Mercado Libre, on the back of all of that news, looks a lot stronger today than it did, just a few months ago. So I still can't quite get over that hill to buy it. I have bought it before and sold it on a number of occasions. I think we've both been sort of guilty of that. But I bought it again at about 700 and sold it at about 1,200 since then, which again is not something to be stiffed at. But it's about that kind of 1,200 figure now, Steve. And if it gets down again to the sort of 700 and 800s, I don't think I'd have as many problems holding it this time. What about you?
Yeah, I likewise have bought it around the 7 and sold it around the 9, but this is quite a while ago, and this is quite a different looking business. I feel a bit more positively about it now than I did back then. I don't know whether I feel 1,155, which is the number I've written down as today. Again, market open might be anywhere now, moving around number. But I definitely think this is a stock where I need to kind of sit down and rethink this kind of by myself. So this kind of came onto our radars back in sort of 2020, 21, early mid-COVID time, I guess, as well. So maybe 2019. And at that time, it looked expensive by pretty much any metrics. And in fairness, I think in 2021, the stock was at just under $2,000. It pretty much was expensive by pretty much any metrics. So I don't kind of feel bad about thinking it was overpriced then. But the trouble with this, and it's the same trouble I have with Realty Income, but with a different selection of market participants, is that I hear a lot of stuff about this that I don't think is very intelligent. And it causes me to dismiss it as a stock for people who don't think very much about stocks. And I'm not saying my thinking is great, but I at least try and have a go and know a little bit more than just, look, it's got a dividend, or look, it's going up. And I kind of think that sometimes I lose myself into thinking when people idly say things like, but the market's not pricing in Mercado Pago, its payment arm. And have no idea what they mean by that, what they would price that at and what they would value that or why or anything like that. And I sort of think, well, that doesn't mean they're wrong. It just means that I shouldn't pay any attention to what they're saying here, right? I mean, broken clocks who tell you everything's overpriced will rightly point out some things are overpriced. Broken clocks that tell you everything is underpriced will be right about some things being underpriced. I think this is well worth another look for me in this situation. Whether I can get over the line compared to other things that are on offer is another question. But I kind of taken with this, and one thing that I like about them very much is they do appear to have quite a good focus on what they're doing now. I don't associate them as being like Amazon, who always seem to be constantly wanting to disrupt something else. They want to disrupt food delivery, and they want to disrupt health, and they want to disrupt... There are always new worlds to conquer for Amazon. And without going all Paul about it, I feel like sometimes you can grow at your own risk here and grow in sort of unintelligent ways. That's very much a theme of this show, the idea that not all growth is intelligent growth. But in the case of Mercado Libre, they look pretty well focused to me, and they look like they're just concentrating on getting themselves set up, making themselves hard to dislodge again, and then after that, they should turn into a cash machine. And that looks quite attractive to me.
They said that on the call, Steve. Gelper said that he was laser focused on the core businesses that they're in at the moment, so he's not looking to really grow any new arms for Melly. He's looking at these two areas, and he wants to be the best at them. And if they become the best in those two areas, they'll do rather well. Just to further your point, people saying that they're not valuing the Mercado Pago, well, that's because it's almost impossible to value, because I mean, what do you know about making loans in Argentina and Brazil? I mean, I know nothing. I mean, I've got the Motorin spreadsheet that tells me that it's an incredibly risky area, but we've got so many things coming ahead which are going to make it even more difficult. I mean, Brazil and Argentina are in talks to make a joint currency, and they want to spread it out to the rest of the countries, the SAR, the SUR for South America. So, if that happens and then we get South America gets its own currency, which actually, if you think about it, might be a very pretty good idea. It might bring some stability to some of the currencies around that area. Although, if I was Brazil, would I want to be tied to Argentina's economy? Not so sure about that. It's been a particularly defaulty economy, if you want to call it that. But there's so many problems with managing money in South America. That makes it an incredibly difficult thing to price. So if I was pricing this, I would be looking at the retail arm of it, and then trying to come up with an arbitrary figure that I think Pago is going to be worth. I think that's how I would have to value it. But it's a lot easier when it's throwing off free cash, Steve, and you can start to plot that free cash growth. It makes life so much easier for you when you start to see margins. I think it's a good business. I'm just not sure I want to pay this much for it. But again, it's only trading at about 57 billion in valuation. This isn't a huge company. This isn't, you've got to look at things like Alibaba, which are trading 10 times as, yes, it's got a lot more revenue, but it's growing a lot slower. But, this is a very, very important market, a very fast growing market. I don't know, Steve. We could maybe get there with a little bit of pushing.
Yeah, two things there. One is the loans thing. Brian Stoffel made a video on Mercado Libre's recent report. I think it's the largest investment he has. It certainly was at one point. prices move around, so it might not be any more, and he's allowed to buy more things, so that may have changed. But he said the biggest risk he could see was them starting a loans business and loans going past due. And I'm a little bit wary of bad debt in this situation, because bigger and stronger and tougher companies than Mercado Libre is now have been brought down by unwisely trying to turn themselves into a bank. General Electric is a good example of this. Things were going very well for them until they started attempting to try and be a bank and messing around in that kind of space. I'd rather they didn't get themselves too growth heavy minded in this kind of area. That seems like a risk to me. I can probably live with that if things kind of just tick over gently here, and I think there is something good to be done, but I would be cautious about them going in too hard, too far, too soon. Since you mentioned Alibaba, though, Steve, I was listening to Charlie Munger at the Daily Journal shareholder meeting. He doesn't even work for them anymore, from what I can understand it. He just manages their investment portfolio, in which he does basically nothing month after month after month. Doesn't get paid for it. But the Daily Journal's investor shareholder meeting, I'm not a Daily Journal shareholder, but it's streamed, is just a Q&A with Charlie Munger in the style of the Berkshire one. But he said something that I thought was interesting. It kind of made me smile a little bit for two reasons. One is he said, I regard Alibaba as one of the worst mistakes I ever made. In thinking that about Alibaba, I got charmed at the idea of their position on the Chinese internet, and I didn't stop to realise that they're still a goddamn retailer. It's going to be a competitive business. This made me smile for two reasons. One is that I thought Charlie Munger was the reason a lot of retail investors owned Alibaba, thinking, okay, if Charlie Munger owns it, how bad can it be? Yes, there's a lot of kind of risk, and VIEs are illegal, and I don't care what else, but damn it, it's cheap, and Charlie Munger says it's okay. Charlie Munger doesn't say it's okay. Charlie Munger says it's one of his worst mistakes ever. The other thing that stuck out to me was he said, it's a goddamn retailer. It is a goddamn retailer, but you own Costco. Costco is a retailer. Like, your favourite stock in the world is Costco. The fact that it's a retailer can't be a reason that you think firstly, it can't be something that you missed and have just remembered. And secondly, even at 99, and secondly, it can't be the reason you think this can't be a good business to invest in. Literally, your favourite stock is a retailer.
Yeah, it's not the only problem Baba has, is it? Do you know what I mean? Like, if you were going to list the things that made it the worst investment in the world, you probably wouldn't, kick it off with, because it's a retailer. I mean, one of the worst problems are is, the whole structure that it operates under is potentially illegal, and the Chinese government could shut it down at any point. Plus, Jack Ma, the last time he spoke, he ended up going in exile for 6 months. So yeah, it's probably under a lot of scrutiny. So yeah, there's a number of problems that you would have with Alibaba, and I'm not sure retailer is right at the top of my problems. But, if Munger says it's his worst mistake, then he's had a very good investing career, evidently.
I think it's probably true that he has had a very good investing career, in fairness. I mean, he's 99, and I thought it quite more entertaining than anything else. And I liked enjoying watching a certain species of value investor, since I've so far been rude about dumb dividend investors and dumb growth investors, which isn't to say that's all the dividend investors or all the growth investors, but there is definitely an unthinking part of both of those communities. There's an unthinking part of the value community too. They just say things like, see, look, this is here's Charlie Munger saying crypto's terrible. Like, you missed the bit where he said Alibaba was a massive mistake and it's like 30% of your portfolio.
Yeah. I saw a video the other day of somebody trying to analyse Buffett's 13F, but it was before he'd sold TSMC, and he was saying that this was a very good buy, and it's Buffett's way of getting into semiconductors at good valuations. I think Buffett's already got rid of the vast majority of it. He's probably got rid of all of it since. He probably just couldn't get the whole block trade on in time for the 13F.
Oh, someone fire Mark Millard then in that case.